let's say, Josh, you're now CCO of a $500 million run rate business. Your CFO comes to you and says, Josh, I'm feeling pretty good about what things are looking like for our next fiscal year. And you've been super efficient with budget. I'm going to give you 1% more of our revenue to go and invest. You would have to sign up for more return on that. And if you look at that money and you're like, I don't know about this, I think I'm doing what I can and I just don't have anywhere to spend it, then I think you have to say no. And similarly, if you look at your budget and you're like, I have a lot of people doing a lot of things, but it's not clear to me that every one of them contributes. And if you don't see those connections, then you should be questioning them before your CFO does. That's sort of the advice I give to leaders is don't wait for someone to question your budget. You question it. Red team your budget. Be like, if someone came to me and said, what would be the impact if I took away, 10% of your budget? If you find it really hard to answer that question in terms of the negative consequence to your business, then I think you may be overspending in your function.
You're listening to Unchurned, brought to you by the Gainsight Podcast Network. If you're a CS leader, you've probably been asked some version of this. Okay, but how much should we actually spend on post-sales? Not headcount per rep, not revenue per CSM, a real budget rule. Abbas Haider Ali runs customer success at Github, everything after the sale. And when he stepped into CS, he went looking for a benchmark he could take to a CFO. What percentage of revenue should cover the entire post-sales engine? Support, CSMs, TAMs, renewals, even pro services. So he called CFOs, a lot of them. And the pattern he found was surprisingly consistent. In most high-growth SaaS companies, the post-sales envelope, as he calls it, lands around 10% of revenue. And as AI starts taking real work off the team's plate, Abbas thinks the target drops towards 7% without sacrificing retention. I'm Josh Haider. This is Unchurned. And today, we're talking about the financial model behind customer success. Hi, everybody, and welcome to this episode of Unchurned. I'm your host, Josh Haider, and I'm here this week with Abbas Haider Ali. Abbas is the Senior Vice President of Customer Success at Github, which means pretty much everything post-sales. Abbas, I'm very excited to have you here. We're going to talk about a few different topics, 3 or 4 separate segments of the show. Github is just a hugely successful business. You're covering 180 million developers last time I checked the numbers that are out there, 26 million Copilot users, 4 million organizations using GitHub, including 90% of the Fortune 100. That's a lot of responsibility for a leader of post-sales. Thanks for being here. Welcome, Abbas.
Thank you for having me.
Okay, so we're going to talk about some cool stuff here. We're going to talk about CS operating models. We're going to talk about the role of CS, especially in this world of AI, generalist versus specialized generalist versus generalized specialist. We're going to talk about AI at GitHub and some of the cool initiatives that you've taken on. And then we're going to talk about how you should be spending 10%, or is it 7%? Of your revenue on post-sales, and you'll explain more exactly what that means. I know I've butchered that intentionally so a bit. But before we go into all the nitty-gritty that are going to help CS leaders in this episode, I want folks, a lot of our listenership, viewership is through YouTube. So for anybody who's actually out there watching this episode, 2 things to take note on the video feed. One is that I constantly have drips of sweat beating down my forehead right now. And that's not because Abbas is so intimidating. You're actually one of the nicest, kindest, most amicable leaders that I've met. But I'm in Singapore right now, and it is humid. And I made the mistake of going to the gym not so long ago. That's number one, if you're looking at the camera. Number 2, the much more interesting thing is that, Abbas, you have the most impressive Zoom background home office setup that I have seen in the last 5 years since the COVID days. So, Abbas, I want you to walk us through, and I want you to actually get up at some point in detail and show everybody what you showed me about your Zoom background.
All right. So, the Zoom background thing has a story. So, I'll give you as condensed a version as I can without skipping any of the fun bits. So, we moved into a new place about 2 years ago. Coming out of the pandemic era, everyone sort of built like a studio at their house, right? You had a mic set up, you've got lighting, you've got multiple screens, standing desks, treadmills, the whole deal. And part of it is you have to have something interesting in your background, unless you're planning on being like a blur background person, which I'm not really a huge fan of. So I picked a room in our new house that is not actually designated as an office. The house actually has an office setup in it. But there was a room that had really nice natural lights, gave me some place to look out, to give my eyes a break during the course of the day. But it had one very significant problem. And that was the ideal spot for the desk gave you the world's most boring background. Literally a pure construction grade white closet. So I asked my team, I said, look, if you could choose your background in this sort of space, what would you put in? And they had all sorts of great ideas: plant walls, library, personal memorabilia, things that are sort of little clues and gifts from like family pieces, something that reflects a little bit of you. Now, a normal person would take one or two of those ideas and put them into effect. I do not do those sorts of things. So what I did was I over-engineered the entire problem. I hired someone, a designer whose work I saw, who does amazing work with metal. And I said, look, I want something specifically for my background and specifically for video meetings, because I spend a lot of times in meetings. Um, and he said, don't worry, I got you. He went off and designed this thing and came back with this. What this thing is about 500 pounds of metal that is welded together in this custom setup that goes all the way up to the ceiling. So if I'm in standing mode on my desk, there's another level, kind of like this one, up all the way here. You can just see the edge of it in there. And the whole thing is designed to capture little bits about me and be a very functional part of my meetings. So if, for example, someone was to say, or if you were at some point in this interview to say, Abbas, give me a book recommendation, I would literally slide back in my chair here, pull a book off the shelf, and I'd be like, Josh, this is a book that I'd love to read. Now, the funny thing is, I have not read any of these books in the background, not in their physical forms, because I'm a Kindle reader. The only purpose these physical books serve is a real world bookmark to remind me of a book that I can pull off and
Oh, that's so
share with
funny.
someone as a recommendation. They
That's
also
so
contain
funny.
little pieces of like, I'm a comic book guy. There's little comic book pieces in there. There's some books that people on my team have written that are in there. Little Easter eggs throughout the background.
I love it.
But
I love it.
probably
And,
the
and it
thing that
opens up too. If you scroll, if you go back there, the whole
so that
thing just
that's the
like
thing
is
that
moving
people love to
parts.
see. What happened to the closet? So the closet is still there. You can come right in here, slide this thing open, and behind there you have a fully functional closet, which you might imagine, well, what would you put in that closet? Well, we all have that box of cables that we don't want to get rid of, but we don't actually need. Those things, plus random things like swag from prior companies, that sort of stuff. This is my miscellaneous work closet that just like holds secret stuff at this point.
That's the money shot right there. Okay, in my mind, I'm writing a LinkedIn post about how a boss, senior CS leader, is democratic and collaborative with his team based on his Zoom background choices, and he's a servant leader demonstrated by that. Yeah,
I
post
mean,
to
it
be
may be a
coming.
little bit too early in the YouTube video, a look inside my brain, but you've gotten it, so it's too late to back out.
Okay, let's jump in. So, where should we start, Abbas? I want you're very prolific in a lot of what you've written and your thought leadership, a lot of the conferences that you've attended and spoken at. You wrote about this CS operating model as part of a Andreessen Horowitz article a couple of years ago, but not so far back. And you talk about the customer hierarchy of needs. And I'd love for you, in brief detail, to walk us through that customer hierarchy of needs.
Sure. So, well, let's talk a little bit about like this statement around like being prolific about writing things. So,
Yeah.
one thing that I find is sometimes people assume that I've been doing customer success my entire career. That's actually not true. So, this is like my sixth year of really having like solely focused on like post sales teams. Prior to that, I've done other things. I've led product, engineering, sales engineering, marketing, all the functions in a company. And so when I got into this thing, the very first few times, I had many questions to which like I thought I knew answers, but there wasn't like clear recommendations. And what I would do is I would ask people. I'd ask people who I knew, I trusted. I would ask Nick a lot, right? Or read things that he was publishing about things. And over time, I sort of formed opinions on things. And then when I was like, I think this actually is kind of true and applies to lots of places because now people ask me about it. When I say it, they say it makes sense. So I'm going to start writing it down or share it in a podcast or a writing or an event. What that does is lets me test ideas at scale. And I love to be challenged on these things, right? Like come up with a perspective, share it, open it up for challenge. And this is no different. I had many conversations with companies in venture back in the venture back world with startups who are asking me the most common question I get from customer success leaders, which is, what does customer success do? Like, what do these people have to do? What's an important outcome that they produce? And for me, the thing that I found that was consistent across the most successful CS teams was that they were excellent at managing only two things: risk and opportunity. That was their primary signal, was to go through and manage the risk and opportunity in the accounts that they were responsible for. And this specifically is about the CSM roles. Now, that is a little bit of a simplistic piece. And so something that we got a chance to test out initially at Segment and then at Twilio, and I've shared with many other companies since, is what are the dimensions in which you think about risk and opportunity? And it's really the same thing. And it reflects really like a hierarchy of needs. And it does build on itself. So at each layer, you're really testing to say, are we good here? And you can think about it in the most simplistic sense, is it red, amber, green? Now, in this particular model, there are 6 layers that you can sort of merge and combine or add more if you want to. But I think there's sort of 6 critical pieces that are part of it. The very base of the pyramid really is about the technical health that your customer experiences the value product. The simple question you're trying to answer is, does your product work? Because realistically, you're going to have a ton of risk in your account if your product does not work. Your opportunity only comes into being when that product actually works. Otherwise, you have that to solve as a core base foundational need. Above that, you're looking for feature completeness. Now, you can still grow a little bit, but you just need a complete set to actually solve more things. Your product might work fine, but if has significant gaps in features, you're not quite there yet. So that's like the next level up in this hierarchy.
And this is feature completeness in generally, or this is feature completeness related to the needs of each customer?
To the
Or
needs
both?
of the customers you're trying to serve. So if you think about your ICP, do you have the right features to actually deliver the ultimate benefit that you want to from your product for those capabilities? Let's say as an example, it's a product that doesn't have reporting. And reporting really is key to unlock their growth and success. You don't have reporting, you gotta have reporting. You're missing analytics. You're missing some feature that's part of your overall feature set that should be on your immediate roadmap. The other piece that comes into next is going to be your relationships. Do you actually have good relationships? Good champions, good economic buyers, good relationship with stakeholders? Because you may have the absolute best product in the world with the best feature set, but if you have no relationships with your customer, it is very unlikely that they're going to grow beyond a certain point. In a PLG business, maybe to a large extent, but in most sales-led businesses where you're going to have CSMs, it's not going to happen unless you have those relationships, you know who they are, and they're healthy. And then there's customer sentiments. Does your customer agree with your perspective that your product works, you have the right features, your relationships are adding value? Because if they think you suck, guess what? Like, you're not going very far, right? So you need to have like strong customer sentiment that you're managing as well. And it goes all the way from, I don't like you as a vendor, to, you know what, I'm going to be an advocate for you publicly. Like, that's the range you're looking at in terms of customer sentiment. And then there's outcomes. We love talking about this, right? Are you delivering business value? So the customers generally will buy a product from you with a vision in mind for the ultimate value they're looking for. And once they've realized that value, you've delivered the outcome. That's kind of a healthy state within there. At the very top of this is the CSM's ability to signal what the commercial health of an account look like. Are the customers set up to renew, expand, or what's sort of the potential commercially within the account? And if you have a CSM report on all of these layers, and just simplistically, red, amber, green, that's all you need, that will give you an amazing perspective on the health of your account. And each one of these layers, whether you have risk or opportunity, the CSM owns the plan. And if you have those pieces together, you've got the model and you've got the plan for whatever the state is, you're set up for that team to succeed.
So I'm staring at the pyramid here. So just to reiterate, at the very top, the North Star here is commercial health. That obviously makes sense, red, yellow, green. But
Yep.
all of the layers beneath that North Star are what build up towards that North Star. Those are the foundations of it, right? So you've got commercial health on the top, followed right underneath it by outcomes, customer sentiment, then key relationships, feature completeness, mapping to the needs of the ICP, and technical health. So that's the
That's right.
pyramid. That's a
Yeah,
lot. I
it
mean,
is
it
a lot.
makes sense. There's like no debate there. But it is a lot to manage when you think about it, right? So
Yeah.
how do you get your team? And by the way, approximately how many folks are working in your CS org?
So in all of the scope of my team, it's 550 people.
Okay, that's a lot to manage. How do you get 550 people to, indoctrinate them towards this methodology and these priorities on a day-to-day basis?
Well, look, ultimately, this is a challenge of just aligning the organization to say, is this something that we actually believe is someone's job, right? Like, do we think it's important? Why is it important? Because no one wants to do this just as like a science project, right? Ultimately, it has to deliver value. And so when you think about managing a customer account, having a rigorous structure for doing it is really helpful. Now, what's in it for the CSM was like, man, boss, this is like a ton of administrative work. Like, why are we doing something like this? Really, the key behind this, it's super prescriptive. When you get up in the morning, you kind of know what the state of your customer is. And by the way, you have a playbook for each one of these layers. Like, what do I do if the features are incomplete? Like, what's my plan for this customer? Well, you know what? That's where you build a mechanism to say, let me grab the feedback from my customer, validate that it actually is important, combine it across the entire portfolio, and have that delivered to our product team so they can prioritize what unlocks the business. It allows you to go through and determine like who are the people who I should go out and travel and see. Do I need to go and travel with this customer or not, depending on the health of my relationships. When I'm sitting down in a forecast meeting, it's not just an AE leading the forecast. I'm contributing input into forecast because someone at the very top of the pyramid is calling expansion, and there are three layers below this thing that are red. Could the deal still happen? Absolutely. But what the AE should know is there's a lot of risk in this deal, right? And lets you manage the risk, manage a forecast. So the key behind this is it cannot be busy work. It has to be actionable for the CSM. It has to be visible to the rest of the organization to know this is a joint perspective we have on the account. It has to be consumed by people and used. Going through an exercise where you build this as some artifact that you just look at every little while for reporting purposes, we pat ourselves in the back and then go home. That's not the purpose behind it. This is a core component of how you actually run the team operationally every day. And every IC looks at this model and thinks about their business through all of these lenses.
Like we said up front, you have 4 million organizations using GitHub. You've got 550 folks in your org. That's customer success managers, or that's including all post sales
That's
functions?
everything.
That's
Everything.
everything. Okay. Um, I can only imagine. Well, I think this pyramid is probably the steady state foundation, right? This is like the rock that doesn't move very often. Maybe it's refined over quarters or years, but it's the foundation, right? But you did mention playbooks, and I could imagine sitting in your shoes how there would be lots of pull from such a large organization to like for these things to these playbooks to be very dynamic and to be constantly evolving. And again, for like those changes, then for them, how do they get up to the top to you and your team of reports? And how did the changes get back down to the rest of the organization? Can you talk a little bit about that? Like, how are you creating, managing some of those playbooks? How are you actually tactically executing and like delivering them to the team? I think that for somebody with such a large remit, it would be interesting for others to learn from.
So I think operation is probably more of a question for my directs than for me. A lot of this stuff gets abstracted
That's
away
the
from
first lesson that we've
yes.
learned here is that when you grow to
Yeah.
that top, it's the operational folks. Yeah.
You have to abstract away some of these things. But look, I'll tell you
Yes.
in general, like if someone asks you like their advice on like how do you like operationalize these sorts of concepts, and then also like how do you actually build these in sort of a stable state? What I'd say, what I guide people to do is say, look, first of all, I'm going to disagree strongly with the point that you made earlier around like, hey, some of these things
Please.
have to stay steady, and the reality is no. I don't think actually any of these things stay steady. In fact, in any given organization of scale, and I talk to my peers all the time, you have to be evolving every function. So when you think about any given organization at scale, the pace at which core technology is moving, the pace that any given company's products are changing and shipping, all those things influence what you do. So if the only way that anyone's playbook should stay static are in a very limited set of conditions. Your product is not changing. your market is not changing. Your customer needs are not changing. You're not trying to increase the influence of your team to cover more customers in more depth. If those three things are true, then boy, you've got yourself a nice stable place to hang out. The
Yeah.
reality is every organization, whether it's customer success, sales, product, engineering, at any company really has to evolve at the pace of those things moving. And if they're not, you're naturally going to fall behind in terms of what you're able to do for your customers.
But I guess my point was that the this pyramid that you have, and we'll link to it in the show notes, but like technical health, feature completeness, key
Yeah,
relationships, customer sentiment, outcomes, commercial health, that for the most part, has its own inertia and
yeah.
is staying as the steady foundation. The playbooks are constantly evolving, I think, is your point.
That's right. Now, we haven't shared sort of what our GitHub internal model of this looks like. This is sort of a representative model that I've used at Segment, that I've used at Twilio. It sort of informs how I think about lots of different capabilities. It is not explicitly GitHub's model, but it is a model that services across lots of different ones.
Okay, so let's move on then, Abbas. On that note, to the next segment here, which is you've published, a few times. You talked about this on stage. That CS post sales, 10% of sales revenue should be invested in the operations of everything post sales, which is your support, your CS, your account management, technical account management, renewals, pro serve, et cetera. And like that's the optimization of where you get the most ROI, bang for your buck, is 10% of your sales revenue. And well, you'll take me down the AI path of that. But how did you get to this magic number? Like, what was your process for that? And maybe explain that to start out.
Sure. Well, look, like I said, this is not like something I've done my entire career, right? Where I can say like, hey, I've like gone through and knew this thing kind of coming up through all these things across many, many companies. What I can tell you is that when you think about the inputs and outputs of an organization, the fuel that goes into any organization is going to be some sort of investment envelope. And when I first started leading CS teams, I found a real gap in data about what this number should be. I could get things like, here's how many CSMs you have per sales rep. Or I could ask people about what is the amount of revenue coverage per CSM. But those are not numbers that translate into an investment envelope. You just can't actually really back into them because they're so variable. It depends on the growth rate of your business, how you segment it, where you assign CSMs versus where you don't. So I talked to a lot of people. I asked them this question around their budget and looking for the measures. And what I tried to do is basically collect it from lots of different peers at companies that were, $50 million run rate all the way up to multiple billions and get a sense of where they fell in this graph. And I really asked them two
By the way,
questions.
did they know like immediately blink reaction what that number
Yeah.
was?
Most people actually did not know off the top of their heads. They had to go and say, let me actually do a little math on this. Like some could bring up like a spreadsheet on the side or their most recent budget deck and kind of reverse engineer the math. And the question I specifically asked is, what is the percentage of your revenue that you invest in all of your post sales functions? That was the first question. And then the second question was, if you do monetize any of your post sales functions, that should be separate from that envelope because it is self funding at that point. What is the margin that you run that at? And those two numbers combined give you sort of the envelope that your CFO hands to you as a post sales leader and says, "Hey, boss, go run the business in this mode." That's how it should work. It should apply to every CS leader. Should actually know this number. But it was very surprising to me that
This is
actually
your rule of
we
this
didn't
is
have
a
this number.
boss's rule of 40, basically. This is your post sale. I don't
Essentially,
know it's the
yeah,
rule of X, but
yeah.
yeah.
And what I did is, it took me a while to actually really center on this number. I think I must have pinged Nick on this several times before, and he'd sort of be like, "You should talk to all these people," and we'd like try to quote the information. It was very difficult. So you can actually Google this and say like, "Someone give me a number," and it'll be very hard to find anyone writing about this specific sense of how you financially structure a post sales organization. You'll probably actually find more references to me than anyone else. That's just the reality, is setting expectations if you look at it, because it's very difficult information to come by. But I talked to lots of places, and then once I found the number, it's like, okay, I'm going to share it with more people so they can look at it and be like, yeah, that's actually true, and sort of reinforce that this is actually a reasonable model. So in the fall of last year, I shared, I think that was the first time I shared the number publicly to say, here's what I believe from all the data that I've looked at this point, 100 plus company that I've talked to about their budgetary structure. And I said the number is 10%.
Did you talk
I
to
think
over 100 companies about what this number looks like for them?
so remember, I spent a lot of time in the investment world as well. So I run a sort of hobby venture fund. I work with a lot of venture backed companies, is guiding them on advice on this at scale. Plus, I know a lot of my peers, and this is something that I am very deliberate about. Like if I'm going to do a thing, I want to learn about it, and so that means talking to a lot of my peers and getting to know those things.
Yeah.
Communities that, including Gainsight, that puts together, are a great place to go through it. I'll pester people to be like, hey, do you have this number? No, you don't. Do you mind looking at it and then texting me when you do? And so like to actually correlate on this number, and there's a range for sure. So it's not perfectly 10%, but the median across all these different company stages, especially in high growth businesses, came right around this 10% mark. Um, and so like I was like, all right, this is a number. And I shared it at the TSI Envision event last fall, which had a few thousand people in the audience and things like that to be like, here's the number. It was validated in the group. They sort of like all go back and talk to each other and stuff as well. And I was like, I think this is pretty good. Now in that presentation, and you can link to it. I think you have the link to this
Yep.
TSI deck. There's a YouTube of the talk if you want to hear the talk. That as a side note was also the very first presentation I did where all the images were generated by AI. That was my very first AI generated presentation. Um,
Pre-nano banana.
Exactly. That was pre-nano banana. Then you can actually see the progression in the decks as things have gone through different model iterations. Um, and so I shared it as like that was a number. We got lots of input, lots of people sort of validated it. I put an asterisk there though. I said, look, here's something that's going on in this world that you may have heard of is AI. And right now, I feel like we're still experimenting with a lot of AI use cases. I feel like we're very quickly going to move into production stages and really start to see the benefits we can get. And that will probably change this number, but I can't tell you what it's going to be yet. I just know right now this number is true. And when it changes, I'll provide an update.
Yeah.
Didn't take very long. So in the spring of this year at SaaStr back in May, I changed the number. That was the first time that I said, hey, look, I was saying 10%. Now if someone says, Abbas said 10%, as of right now, that number is wrong. I'm actually going to say that number is declining from 10 to 7, depending on how quickly you're able to get AI into production in a customer facing capacity. The actual number now is 7%. And
So
that's what I
is
believe is much more
7%,
truthful.
so Abbas, is 7% should that be the North Star and the goal for folks? Or is that more of like the median, or mean of percentage of sales revenue?
If basically you're starting a new business right now that was going to start bottom up, no history of previous technology, process, structure, anything like that, I would say you aim straight to the 7% of your revenue is what you spend on post sales. If
Yeah.
you're an operating business today, you're probably going to be spending somewhere around the 10% mark, or you should be if you're sort of meeting the right criteria for investing in the adoption and growth of your revenue. Then you should be looking for that number to decline to 7% as you sort of have your business grow. So it's not like you just kind of like slam on the brakes and take it down to 7%. You have your growth curve and your investment rate sort of meet at that point.
So this concept, like you said, you're the world's foremost leader, I think, are around percentage of sales revenue of revenue, that should go be invested into post sales operations. Is that because this was such a unique insight, or maybe again, like you came from a multidisciplinary background, and so you had a new lens to look at, which is very important, or is it because it's like it wasn't as relevant before? I guess the question then is, how do CFOs respond to this number when you bring it to them? Are they like, oh, like this is exactly what we need to be showing at the board level?
Yeah. So I will say there's an element of in times of plenty, no one really pays that much attention to this stuff. And so as soon as in sort of a, ZIRP world, money's kind of free as long as you're growing. You're like, all right, what do you need? Like, we'll come up with some rationale for it and we'll figure it out. And what happens when you do that? You either underinvest or overinvest. But there are two things that happened that I observed I basically started leading full base, CS teams really in like 2020-ish, actually coming right into like the pandemic era. And what I found was, you could kind of do whatever you wanted. There was not a ton of accountability. But as soon as things started tightening up, people start asking questions about ROI. Like, what am I getting? Right. And there's two dimensions to this. They would be like, well, what's my return? That goes to the first topic that we started with, which people would say, like, what does this team do? Like, I don't have total clarity on what this team actually owns that is
Sure.
unique that they do. You get things like, oh, like quarterbacking the account or, orchestrating things. I'm like, what does that mean? Like the R on the ROI is squishy. So when things get tight, people are like, the CFO is like, well, you know what? Then maybe that's where we cut from if we're not clear in the R side, right? Like those things become considerations that CFOs have to have, large companies have to have. And then the other side of this was the I side of it, right? Which is like, are we investing the right amount? And so it was only when we came out of ZIRP world that people started asking questions. And the questions would be asked by boards and CEOs and CFOs of their leaders in every function. And they would say, what am I getting for putting in? Because money is no longer free. And so now we have to justify the investments that we're making and how we're doing them. And so the question comes into people start looking for this data. Now, this is the era that I was in. And so this is generally my style anyway. I like to get a sense of who are the best people in the world doing these things and what can I learn from them. Like everything I know is built on the knowledge of other people who've been kind enough to share that knowledge with. People are incredibly generous with their time. Say like, boss, watch out for this hole. Don't fall into it. It's going to hurt. You're going to trip over this thing. Please don't do that. This is a really bad idea. There's so many people who have been really, really helpful to me. What I try to do is write these things down, take detailed notes. And one of the conversations that I had with unnamed company CFO was he actually guided me to say, you really should look for this number. He said like, because he's like, that's a question that he had. Like he asked his fellow CFOs and he's like, I don't really get a lot of clarity on this. And so I spent time really looking for this information to write down. And actually, I knew that I'd like dial this in enough where it was interesting to CFOs when a CFO Substack wanted me to talk about it with his audience, right? Or actually their audience, to be clear. I actually don't know if, who the person is. They're anonymous. It's the only CFO Substack. Fantastic Substack, by the way. Like one of my favorites I subscribe to. But they were interested in actually me publishing more details about the model. And I was like, now I know CFOs care about it because a Substack oriented towards CFOs is like, let's write some of this stuff down in detail, like, and push me very hard to be like, give me the number, give me some examples of why you'd break it out by team, like what would be the structure, what would be per function within the post-sale world, what are the KPIs, how do I measure the ROI? And so it actually forced me to actually really concentrate my notes into what is actually now one of my favorite pieces of writing is that particular subset.
It's a great, but first of all, I read the article. It's a great article. I love how you break down. So anybody, we'll put it in the show notes also, but like you guys should go check it out because you break down not only 10 or 7%, but like this is customer support and this is your technical account management and like per line item within that. Only CFO is a great Substack. We'd also love to have you maybe contribute something along these lines to our unchurned Substack. Would be great one day as well.
Yeah. Yeah.
Yeah,
I will say there is one nuance though that does not show up in the Substack post that I think you might be interested for the audience if you
please.
don't want to walk through it. So, people always ask me saying like, all right, so here's how this works. I go to my CFO, they've read this Substack, they're like, no questions asked. Here is 7%. What do I just follow the formula? Like, how do I start? Like, what's my mental model to think about spending that 7% wisely? And I would say, look, the first pathway to think about in a company is what is the most important thing that like a CCO needs to think about for where they spend their money? Well, really the place you're going to have to start is in your scope is you're going to have to start with support. Because if your customers cannot get resolution when they're in trouble, then your entire business is messed up. And
Sure.
so what you're looking to do is actually decide what the waterfall looks like. So you want to start with support. Now here's sort of the secret though, right? You can't overspend on support because if you do, you're starving everything that comes next. And support is reactive in nature. It's reactive customer success. It is a model where customers calling you because something has gone wrong. So you
Sorry,
definitely
you
want to
said
give them
you
the best
can
possible.
or you can or cannot overspend in customer support.
You cannot overspend here. in the sense of like, you don't want to
Oh,
spend
you
too much
should
of
not
your 7%.
overspend. I see.
You
I see.
should
I thought you
not
were saying like
spend too much
one.
of your
Got
7%
it.
there.
Got
So
it.
sorry,
Okay.
language
Do
choice,
not
right? But you
overspend.
want to
Yes. Do not
minimize your
overspend.
spend there. Yeah, you got to minimize your spend there enough so you deliver the level of service you need to get the job done. And there's a little, I'll come back to like another asterisk on that path later, because of course I'm not advocating for the bare minimum in terms of making customers' technical support experience great. But like that's sort of what you want to do, because the rest of it gets to be spent on more of a proactive customer success motion, which drives adoption, durable growth, focuses on that pyramid, and ultimately drives growth of your business, right? So that's what drives GRR and NRR. So you want to make sure that you're saving as much as 7% envelope to flow through to the part that is more proactively driving customers to be successful versus reacting to their support needs. Now, that's the 7% on, like the cascade goes down that way. But there is an option. Now, you'll recall I said there's two numbers I actually care about. One was what's in the envelope that the CFO gave me, but also I'm going to ask for the right to say, if I can monetize things, I get to keep that, right? Like in the sense of if I basically get to eat what I hunt for, right? Like that's sort of that
Sure.
particular example. And that's where I have optionality at every layer, including the first place I'd apply it is support. Because if I go to a large enterprise customer and I say, look, do you want the regular support experience that you pay for as part of the product subscription? Or I have an upgrade option for you. It's somewhere between 5 to 8% of your subscription fee that you spend, whether it's usage-based billing on a monthly basis or an annual subscription. For that uplift, I'm going to give you some additional features. What are the most common features you get? You get an SLA, you get to be front of the line, we'll update, like there's like all like the things that are
Yep.
premium support things. But guess what? That's how you provide excellent, amazing technical support capabilities. And customers are generally willing to pay for that because there is a time window where when they really want help, they want guarantees. And this provides an ability to provide guarantees. And then it still allows you to save that 7% to spend in other areas.
Yeah, I know. I know. At Gainsight, our head of our VP of customer support, Kartek, he's very proud of how he runs his P&L.
Yeah.
Similar types of operating principles, and yeah, it's definitely a mark of pride that he's able to sustain that business unit.
That's right. And it's really important. And look, it serves the needs of the business, it serves the needs of customers. Generally, it is one of those rare operating principles that is win-win on all sides, right? CFO's happy, customers happy, team is happy. You're able to kind of grow with the needs of the business. It's a great way to actually react to that. And of course, professional service is another area of monetization that comes in as your business grows. Your adoption energy that you provide to customers, some level of that intensity is available for what you invest as a business. But some customers are willing to pay for it. It's normal as part of their interaction for especially highly complex technology. And so you want to build a professional services business as soon as you're able to, and then dial in the margin for that as well.
Let's put a pin in the ProServe for a second before we go there. This level of investment, the 10% now receding to 7%, it's predicated on like what is the goal that you're seeking to accomplish with that level of investment, right? Are you
Yeah,
trying to get to a 50% NRR or 150% NRR? So you do have, and I looked at your materials, you do have a slide in here that talks about the return you should expect on this investment. Can
that's right.
you share those details with everybody?
Well, look, I think ultimately when you're looking at any of these examples, we've been talking about the I side of ROI, but the return is super important, right? Like what should people expect when they when they look at this? So what I did was try to get data on what are the common attributes for companies that land around this investment rate that we talked about, right? 10 sliding back to 7 sort of rate. Generally speaking, when I collect this data, over time, it's still fairly true. Maybe it's a little bit lower on NRR, but it's right around 120 to 125% net retention. If you're delivering that, you're earning the right to basically hold on to that investment rate. That's a reasonable return. You also want to be returning between 80, if you're running a SMB mid-market sort of business, in the 80s of GRR is what you need. If you're running an enterprise-oriented business, it's got to be 90% plus gross retention is what you're delivering for that. And then in terms of if you are monetizing, depending on the stage of your business, Series B all the way up to public, you can afford to lose a couple, 10, 20 points of margin on services, or you can up to 70% there. You're also trying to go through and actively reduce
This is for professional services, the margins?
professional services. Yeah. And
So
support is similar as well. I support generally runs a little bit higher margin there.
Okay, so
Um,
the highest the most premier packages for the most mature companies are around 70% margin on their
you should be able to
gross serve
throw
and
off like
support.
70% margin, but
Yeah.
in between support and services, you should be able to.
Okay.
And then the other piece you want to deliver its ROI is if you have built the right investment of your 7%, it's acting as a shield for your product and engineering work. So you're not just like sending noise that way. You can measure that in terms of escalation rates from support tickets, how many feature requests overwhelm engineering. There's several measures within there. But generally, I just lump that together just into a simplified your engineering and product organization signal to noise ratio. You're trying to minimize the noise. You're also driving productivity.
Is that an actual metric, signal to noise, or
Yeah.
that's kind of how you're really?
Well,
So
you can build like an aggregate metric that captures a bunch of different things, but it's going to be
okay,
things like signal to noise ratio, bandwidth allocated for customer features, disruptions to roadmap. There's like several tiers of KPIs. I think they're actually
yep,
in that only CFO post in terms of how you calculate it.
okay,
If I recall, I don't 100%. I think there's pieces in there certainly, or maybe a topic for another day. But yeah, generally speaking, part of the reason you get that investment is you're a shield to making sure the company is able to go through and deliver on the product vision and not get distracted by random things that are coming in from the market.
sure.
The other thing you want to focus in on is productivity for other parts of your organization. If, for example, in your post sales organization, you include renewals and account management, which some teams do, I'm a fan of that because you want to have some level of commercial responsibility, then that should be actually working in the sense that your sales team should be able to run at higher productivity. What does that mean? More quotas, faster deals, like essential core sales productivity has to be coming in as well. The team has to be signaling opportunity, going way back to early conversation, risk and opportunity signals. How do those opportunity signals ultimately show up? They show up as CS qualified leads. Your team's not able to go through and generate those, then I don't think you're earning that investment within that organization. And then the last and very important piece is customer advocacy. Your team is not able to generate consistent, strong customer advocacy, whether it's with product launch or ongoing case studies or customer references, then you don't deserve the 7%. And that's ultimately how I think about this is you have to focus on not just on the I side, be like, here is the budget I should have, but you have to be realistic about the return. And when you don't have that, I think organizations have the right to question the investment envelope, the style of the team, the structure of the team, what they do. I think those things rightfully should be questioned.
Before we move on, I want to summarize this because I think there's some really important points here that if I'm a CS leader, I'm taking note of this recipe book that you've provided. So again, cost should be between 10 to 7% of your revenue. That encapsulates your post sales operating costs. And check out the blog if you want the breakdown on each of the subgroups within that. On the return side of that investment, you're looking at things like upwards of 125% net retention is the goal.
That's right.
Uh, 80% on the GRR side, if you're more on the commercial SMB segments, but really in those low 90s plus, if you're
That's
at the
right.
more enterprise grade and scale. Margins on both independently, respectively, customer support and professional services of negative 20% if you're a startup and you really, you just got that Series
Yeah.
B and you're all in now on the white glove service, but all the way upwards to 70% as the true kind of, again, to use that term, North Star of how you're operating with your team in terms of its profitability. And then being able to deflect a lot of the noise in escalation tickets, the support tickets that otherwise might encumber your product and design team. That's something that you want to measure as well, right? Is how you're kind of saving them the time and bandwidth so they can just go build, and focus on new feature development where possible.
That's right.
Revenue team productivity is the next piece that you put in play there, basically freeing up, similar to the product engineering team, but freeing up your sales team to focus on new logos. So giving your post sales, your CS teams, and renewal teams their own accountability of revenues. Again, so your AEs can focus on new sales, and then CSQLs and advocacy, and making sure that you're measuring and giving goals towards
Yeah.
those as well.
That's right. And the real test of this is, let's say, Josh, you're now CCO of a $500 million run rate business. Your CFO comes to you and says, Josh, I'm feeling pretty good about what things are looking like for our next fiscal year. And you've been super efficient with budget. I'm going to give you 1% more of our revenue to go and invest, you would have to sign up for more return on that. And you might say, you know what? I'm totally into this. I can do this because I know that we have more room to run in terms of the account management side of things. We can take on more renewals that frees up the bandwidth for net new ARR from our sellers. I'm going to sign up for that, and that's where I'm going to spend that money. Or I'm going to take that money and spend it on um, driving up what we're investing in our professional services that we give to customers, maybe lower the margin a little bit, but invest on what we're putting in on behalf of our customers, because I feel like that's the blocker. I'm looking at our customer health and aggregate across our portfolio, and I see like adoption is blocked by a couple of phases. And if I just throw a bunch of energy into like stage two feature set adoption, I know that's going to unlock a bunch of net new ARR above and beyond where we are now. That's where you, Josh, would be like, I will sign up to this, right? I will take the dollars, but I'm going to commit to an outcome. And if you look at that money and you're like, I don't know about this, I think I'm doing what I can, and I just don't have anywhere to spend it, then I think you have to say no. And similarly, if you look at your budget and you're like, I have a lot of people doing a lot of things, but it's not clear to me that every one of them contributes. And this is not an exhaustive list that we just talked about, right? There are
Sure.
other ways of measuring impact as well. But if you don't see those connections, then you should be questioning them before your CFO does. That's sort of the advice I give to leaders is don't wait for someone to question your budget. You question it. Red team your budget. But like if someone came to me and said, what would be the impact if I took away, 10% of your budget? If you find it really hard to answer that question in terms of the negative consequence to your business, then I think you may be overspending in your function.
Love it. Thank you for that sage advice and playbook. Last piece that I want to talk about with you here today, and we'll go through the high notes. We'll see how much of a rabbit hole we go down on this one, um, because we could, is given the rise of AI, what are the implications for the role of the CSM moving forward, the future role? So I know you've got some thoughts around this. Introduce us to your notes around the specialized generalist.
Yeah. So look, I think this is one of like the newer things that I'm trying out in terms of like testing. So I tested this in New York at an event that we held there across several, teams across that showed up that we talked about. And I talked about like the evolving skill set of the CSM role. And if you think back to like the history of how all of our functions really in any part of the business have gone is we've incrementally been specializing all our roles, right? If you start all the way in go to market from SDRs, BDRs, SMB seller, mid-market seller, enterprise seller. You've got an SE, you've got a specialist SE, you have field CTO, you've got you've got CSM, CSAs, TAMs, technical CSM, services delivery engineers, customer reliability experts. You've got service delivery engineers. You've got forward deployed engineers. You've got all these roles. We've got these super hyper specialized roles that we built out, and it's because as complexity has increased, we're just human beings, right? So at that point, you kind of have to specialize to get really, really good at a thing. If you go into earlier stage companies, those specialized roles don't exist. It's because you're looking for unicorns, right? You basically like have a unicorn who has enough skill to cover all those things. And look, it's hard enough to find one unicorn, much less a herd of unicorns. And so what you wind up doing is specializing to create the focus to find the people to scale up these functions. But I think we're like an interesting moment when we think about like the traditional skill sets that when you look across your organizations, they have sort of like these radar charts of skills, right? So there's commercial skills or relationship, technical depth, domain knowledge, portfolio management, like all the various skills that are in there. I think there's a reference in the talk that the slides are public. We can share as well. And so you have all these like roles that are some variation of strengths in these areas. And you've had to do this because there's no other way to find a person who could cover all those things. But we have a new style of option here that I believe represents a change in how we think about some of these functions. And that is that a lot of our functional capabilities are limited by the knowledge any one person can retain and expertise that they can have. But, the LLMs that we use are actually really good at knowledge retrieval and combining things and building together context across different domains. And so I actually see like a skill coming out in terms of very successful CSMs who they have like a general skill where they're pretty good at a whole set of areas around the skill model that I described earlier, but they're specialized in one specific way. They're really good at utilizing AI tools when you give to them. And when you do that, what they wind up with the ability to do is they're specialized at using these tools. They're generalists in the concept of post sales, and they can apply them across all these disciplines. And so now you can talk to a person who is a pretty good services consultant type person, a pretty good question to answer a person to answer your support question, pretty good at answering your technical CSM questions. So they can cover a bunch of different domains. It doesn't mean that they're the absolute best in the world at all those things. But you know what? They're pretty good at lots of different functions. It simplifies your customer journey, your relationships you have, because you have a person who can cover a lot of ground instead of handing you off to a bunch of different people. And now the specialists who are in those roles we talked about before, the benefit to them is they stop dealing with the repeated problems. They're not dealing with the same 5 things that they have to deal with all the time. They're moving up the value chain. And so ultimately, what I believe this provides is a couple of benefits. Ultimately, it's this sort of thing that gets you from that 10% to 7% because you can cover more ground. But at the same time, the benefit for everyone who's in the mix is they're not doing rote work. They're applying their skills where they can add the most value. And each one of their engagements becomes more valuable to the customer and more interesting to them. They grow better in their skills as well. And this is true across all the disciplines where we see it. And we're seeing the early parts of this in teams that use these capabilities. A lot of like AI native organizations have these sorts of structures. The reason they're able to scale up very quickly when measured by revenue per employee is because without necessarily talking about it in this way, that's what they're doing. They have all the scale levers available to them in these AI native models to go out and capture and apply this knowledge out to their customer base.
You basically created a T chart for the skills and capabilities of a CSM, but the north south pole of that T is AI tooling and your
That's right.
familiarity and capability with AI. I really like that. I mean, obviously, that applies to all functions, right? To leadership, to pretty much every domain. It's like AI is going to give us more breadth, but we will need to really become experts in how to use it for all those different pieces of our
And
work.
look, I think this applies on a very personal basis as well, right? Like we talked this briefly in
Sure.
our conversation last time is, like even as an individual, I can only retain so much knowledge, even about the things that I've talked about, written about, think about, have notes on. I can only actively retain so much. And so you can actually apply the same abilities to your own knowledge, personal knowledge graph as well, not just your professional knowledge graph. And there's ways to do this for these toolings as well. I've probably gone, as we talk about the crazy background, I go too far with things. I've gone kind of far with this particular one as well in my own case.
Abbas, we're at we're near the turn of the new year here. What's your CS resolution for 2026?
So my CS resolution is actually to do a better job in terms of normalizing how we do learning and development in CS, because I do feel like we're in this mode where the technology is evolving so quickly, the use cases are evolving so very quickly that I want to like take a beat to make sure we're not leaving people and skills behind and not leaving opportunity on the table for people to grow. I think we wind up in sort of a interesting 80-20 rule where 20% of people are really, really good and 80% are still learning how to apply these capabilities. And I think it's really important for organizations to set very explicit goals around the fact that they want them to use it, create space for how they learn from each other, how you capture and codify best practices. And I think one very important lever in this that is part of this organization is how you think about knowledge management and how do you think about collecting knowledge and making it available to everyone. But I think in particular, uh, you know, I do believe in this sort of general direction of specialized generalists for all functions. Um, but I think that then means that we have to be deliberate about how do we actually build more of these specialized generalists.
Thank you for being on the program today. Lots to learn from you here. I certainly did, and I hope our viewers and listeners did as well. Abbas Haider Ali, we look forward to having you back. We'd love to have you back sometime later in the year.
Happy to do it, Josh. It just allows me to battle test more opinions.